Hello friends, CS Anuja this side. So we're continuing with our revision for the CMSL subject. We are going to be looking at chapter number 6. Okay, chapter number 6 and chapter number 7. Friends, this is the continuation of the revision series for CMSL. In the previous video, we had done up until chapter number 5. So if you haven't watched those, please do watch them and then come to this video. Either ways, in this video, we're going to be looking at chapter 6, 7, and we'll be doing some writing practice. So what I've done is I've created like a question book. Maybe we can take out, one question per chapter. Some we can discuss, some we can practice writing. So please watch this video till the very end. It will be super helpful for you if you are revising in the last minute criteria. Okay, so this is before we start with the rest of the video, I again want to reiterate one more thing. This is a revision series, this is a recap series. Okay, so if you haven't studied, please don't assume that this video is sufficient for you to go and write your examination. This is merely helpful for you for your revision. So if like before coming into this video, make sure that you have at least gone through your notes, gone through the academy notes, or gone through your textbook, properly studied it once, and then you're coming over here. All right, so keeping that in mind, let's actually start out with the chapter itself. We're looking at chapter number 6, securities market intermediaries. So the intermediaries, when we look at it, we basically we cover these intermediaries into two parts, that is primary market intermediaries and secondary market intermediaries. Okay, so one more thing before I start out, these are notes that we have created for the purpose of teaching. Okay, so that's why we have annotations and we have like our own notes created for this. I'm merely doing a recap session for the same. So if you want access to these notes, if you want access to these classes, then all the links are given in the description below. Also, one more thing I want to tell you, I just want to recap over here. We have our own website and our own mobile app that goes by the name of CS Mentor. Okay, and here we have recorded classes on a monthly basis, 2-month and 3-month basis. So if you want access to any of the classes or any of the materials also, then you can simply go and you can choose one of the options that is most suitable for you. Okay, choose it, watch it, learn it, and then be prepared for your examination. So how do you access all of this? Everything is given in the description below. Please do access it, and let's come back to our chapter. So coming back to intermediaries, primary market and secondary market intermediaries. So what is primary market? All the people that will help you go for IPO, FPO, rights, bonus, the first time listing. Whereas secondary market intermediaries are continuous. They will keep giving support services for the same. So who comes under primary? Merchant bankers, bankers to the issue, both are in the form of bankers only. Even underwriters will technically be a bankers only. Okay, so merchant bankers, bankers to issue, underwriters. Then we have registrar to an issue who's separate, and then separately we'll have share transfer agents. Now, please understand, share transfer agents can come under both primary and secondary market, because these guys will be there with you along your full journey as a listed company. And then wherever we need debenture trustees, we have them also. Then secondary market, we have stockbrokers, we have depositories, we have share transfer agents, we have many more intermediaries also. But this is our basic classification between two of them. Okay, so now, like, these intermediaries, who are they? We've again and again discussed that a company cannot deal with the public at large, especially through a stock exchange, on its own. There are a lot of supporting institutions that have to help with that particular activity. These are who we call as intermediaries. Now, SEBI is in charge of regulating these intermediaries, and as a result, they've even passed the SEBI regulations, the intermediaries regulations of 2008. Now, this part I'm going to go a little bit faster because it's on the simpler, more simpler procedural aspect of it. Every intermediary has to be registered with SEBI, so they have to make an application. They have to check whether they are eligible to make that application. Then SEBI will verify and inspect the same. If there are discrepancies, if there are issues, if it is incorrect, if it's false, misleading, or the people who are running these intermediaries are not fit and proper, then the application can be rejected. But then if everything is in order, then SEBI will grant the application. But this particular registration can be conditional also, in case in case there are any proceedings pending before court, tribunal, etc. Now, please understand, an intermediary can, like, one entity can do multiple intermediary activities. Like, say, for example, they can be a custodian and they can be a merchant banker. So, in that case, they'll have to take separate registration for being a custodian and separate for merchant banker. They can't just take one registration and then do all activities of all intermediaries. No, one activity, one registration. Now, to ensure that SEBI does not simply delay the process, there's a deemed approval. So within 60 days, okay, within 60 days of making the application, if SEBI doesn't respond, it is deemed to be approved. All right. Now, apart from this, intermediaries are required to have a compliance officer. They are required to have a compliance officer, and more importantly, the certificate of registration should be displayed. Then display the contact details of your compliance officer and maintain all books and accounts. Then apart from that, they have to redress investor grievances, okay, because we are ultimately in the public domain. It's anything to do with the IPO, FPO, or even primary and secondary market. All of these intermediaries are liable to the public, and they have to deal with investor grievances, maintain records of it, and do quarterly reporting. Please remember this, they have to do quarterly reporting. Then obviously, if we're going to appoint a compliance officer, that's one of the main things. Okay, compliance officers are required for SEBI, like wherever it is applicable. However, an intermediary may not appoint a compliance officer if it is not carrying on the activity of an intermediary. Simple as that. Then investment advice, these people are actually not supposed to give investment advice. Okay, intermediaries, directors, officers, employees shall not give any kind of information, real time or not, to the public. And there's one, we have to keep in mind artificial intelligence, because artificial intelligence is directly related to privacy issues. Not only privacy, it is security, it is being in compliance. So we should use artificial intelligence both properly and also safeguard against it. Okay, so like this, we have a few regulations under the intermediaries. Obviously, no person regulated by SEBI shall have direct or indirect association with another person who provides advice, tips, or recommendations. Okay, so basically, an intermediary, SEBI is coming and saying, buddy, if you want to be an intermediary, you can't be associated with a person who's easily giving out investment advice. Because you must have heard of all these stock tips, investment advice. Invest money with me, I'll double your returns in what do you say, in 1 week's time. These people are actually not supposed to be associated with an intermediary. All right, there are many reasons for this. Coming down to what is the regulatory framework for intermediaries, I want to come all the way down to, okay, yes, we'll start out with merchant banker itself. So before we actually start out with this, right, one common thing that you can see across all the intermediaries is a topic that we'll see as general obligations and responsibilities. Okay, you will notice that at least 4 or 5 points under this topic of general obligations is consistent across every single intermediary. Okay, so we'll just take a look at that first, because you'll notice it's a repetition in every single intermediary that we see. Then what I will be doing is I will only be looking at the conditions or the roles and responsibilities or the eligibility criteria for each and every individual intermediary. Okay, so general obligations and responsibilities, first and foremost, every intermediary will have to follow something known as a code of conduct. Everyone. So they will say merchant banker shall abide by code of conduct, your custodian shall abide by code of conduct, something like that. Then, no merchant banker shall carry on any business other than that in the securities market. Okay. Then, not only code of conduct, they have to maintain books of accounts, records, and documents. So, follow code of conduct, maintain books of records, accounts, records, and documents. Then, financial statements has to be filed with SEBI. Now, whether this is half yearly or whether this is yearly, that we will see. Then, preservation of these books of accounts shall preserve it for a minimum period of 5 years. And then apart from these, there may be some additional criteria that is applicable. So in this case, merchant banker has to appoint, yes, one more thing, appointment of compliance officer is common across almost every intermediary. And then they have to, all disputes will have to be solved through a resolution mechanism, and they have to redress investor grievances. So repeat general obligations with me: follow code of conduct, maintain books of accounts, preserve it for at least 5 years, report to SEBI half yearly or yearly, depending on which intermediary it is. Then appoint a compliance officer to comply with all your rules and regulations. Then dispute resolution mechanism should be there, appoint mediation, conciliation, arbitration, whatever be the case. And then also make sure to redress investor grievances. And then they should comply with the investor charter specified by SEBI. Okay, now similar notes will be there across every single intermediary. Let's take a look at it. Okay, merchant banker. Who's a merchant banker? They're basically a bank. Okay, now a bank is going to be engaged in the business. I mean, this merchant banker will be engaged in the business of buying and selling securities or acting as a manager to the issue. So every time a company decides to go for an IPO, FPO, bonus, whatever be the case, they need to have appointed a merchant banker. So what is the role of a merchant banker? They are managing the listing of securities on the stock exchange. That is their main thing. Now remember, I said merchant bankers are also underwriters. So any underwriting related to that issue should also be done by them. Then SEBI places a lot of importance on merchant bankers, because SEBI is like, look, I can't keep watching over every single issue. So merchant banker, you oversee the issue and you give me a report saying whether it has been complied with or not. So managing, advising, giving any kind of advisory services. Okay, all of these are merchant bankers. Then they'll help with private placement of securities. They are completely involved in the IFSC services. Okay, international financial advisory services are there. So every merchant banker should have a net worth requirement of at least 5 crore rupees. Fine. So this is with respect to a merchant banker. Now comes registrar and share transfer agents. You need to understand that a registrar to an issue is different from a share transfer agent. A registrar to an issue is basically appointed only for the actual IPO or FPO or whatever bonus rights, etc. What are all of these? It's being listed for the first time on the stock exchange, right? Now I'm not talking only about IPO. A company could have already been listed on the stock exchange, and then additionally they'll want to list more shares. That time they have to have a registrar to the issue. So what exactly happens over there? The company will have to issue securities, but before issuing securities it needs to give an offer letter. So offer letter, then it needs to collect the application money, then it needs to allot securities to the public. Now how does a company actually do this activity when crores and crores of people are involved in the IPO process? They don't. They give it to the registrar to the issue. So your registrar to an issue is basically a body corporate or any person or group of persons to carry on the following activities: collecting applications. Okay, because we gave an offer letter, we're going to collect applications. Then they'll keep a record of applications and money received from all the people. You'd have heard of IPOs being oversubscribed. We need to keep a track of who and all subscribe to it, and then determining who is eligible for the allotment basis. Finalize that list, send out allotment letters, refund money to whoever it is required, issue certificates to people who've got the shares. That is the role of your registrar. But your registrar will just come, he'll help you list, and then he'll keep going his way. Share transfer agent is the one that's going to be with the company along the way. So now we need to keep a track. We need to keep a track of all the securities that are listed. Because let's say I applied for an IPO. I have, let's say, 100 shares of a company. Now I've sold those 100 shares, someone else has bought it. Who will keep a record of all of that? That's your share transfer agent. So this share transfer agent basically maintains a record of all the holder of securities, and then they perform the activities of the activities of transfer, redemption, all any kind of related matters therein. Okay, so basically, one more thing is that a department or division of a body corporate performing the activities of a share transfer agent if the total number of securities issued exceeds 1 lakh. So when a company has issued more than 1 lakh securities, okay, then they have to have an in-house share transfer agent. So that's one of the rules over here. When you take a look at share transfer agent, they have some activities pre-issue, during the issue, and post issue activities also. What is pre-issue activities? They have to collect figures, they have to coordinate with the lead manager, they have to deal with SEBI, with stock exchanges. They are basically facilitating the flow of information between everybody. During the issue, they collect all of the data, forms, certificates, they deal with intermediaries, everything. Post issue activities is all of these things. So sending out allotment letters, dealing, I mean, again, liaising between your stock exchange, merchant banker, lead managers, all of them. Dispatch refund orders or dispatch allotment letters. Okay, then what if it's been oversubscribed, or what if it's been undersubscribed? Then they have to reconcile the money that has come in, they have to return the money that has already been paid. But today we have ASBA, so that's not really like counted. Then they're saying there are two categories for these agents. Category 1 should have a net worth of 50 lakhs, category 2 is 25 lakhs. Now come to the general obligations. Code of conduct should not act as a registrar for any issues in case it is an associate of the body corporate issuing the securities. So it's already a body corporate. What if it's holding 20% shares or more in the company that's going for an IPO? You can't be a registrar in that case. Your relationship as a registrar to an issue should be unrelated to the body. Maintain books of accounts, preserve them for 8 years, appoint compliance officers, redress grievances, comply with investor charter. Isn't this the same as merchant banker? Now come to banker to the issue. Banker to the issue is what? Basically, they're bankers only. They'll accept money, they'll refund the money, they will pay dividend, they'll pay interest, they'll open bank accounts wherever it's necessary under law, or any other activities that is required for them to do. Basically, they're your bank. And what's the difference between banker to an issue and a merchant banker? Well, a merchant banker can be a banker to the issue also. Okay, there's no requirement that only one intermediary can carry on only one work. They can do multiple activities provided that they have the registration for it. Now look at the general obligations and responsibilities. Exact same thing, right? Coming down. Debenture trustees. So, friends, I don't even need to do debenture trustees, the role of debenture trustees over here, because we know what their role is already. Every company issuing debentures has to do it through a trust. And when you have a trust, you will have a trustee and you'll have a trust deed. What is the role of the trustee? He has to act in favor of the debenture holders. So he has to ensure that there is, if it's a secured debenture, then he has to ensure that there's enough property or assets to support the amount in debentures. He has to get constant reports from the body corporate. He has to take possession of the trust property wherever it is required. What if the company does not pay out interest? He's the one who has to go stand in front of the company and ensure that, okay, company is not paid out for 2 months' time. Then I'm going to make a sale of the property and pay back the debenture holders. He's the one who has to do the reporting. He's the one who has to keep checking. Is the interest of debenture holders being affected over here? Those are his rules. And so what they're saying is that, okay, every debenture trustee should have a net worth of not less than 10 crore rupees. All right. Then, friends, we get stockbrokers and sub-brokers. Now, what is your stockbroker? Basically, a stockbroker is the one who is registered with the stock exchange as a member. So, stock exchange, stockbroker. Remember it that way. But stockbroker is still regulated under SEBI. You have to keep that in mind. Now, what does the stockbroker really do? Friends, it's simple as a real estate transaction. Or let's say that you're going and looking for an apartment in Bangalore. Okay, now you don't know much about the place. So you're like, okay, fine, let me go through a broker. What does the broker do? He helps you find an apartment. The same way you have a stockbroker. The stockbroker helps the seller and the buyer carry out their transaction. So he's an intermediary, simple as that. Now, who's a sub broker? Sub broker will come under the stockbroker. He'll work with the stockbroker instead. He won't deal with the stock exchange directly. Now, even these guys will have the same obligations and responsibilities. Maintain books of accounts, preserve them for 5 years, appoint compliance officer, comply with the investor charter. All right. Next comes portfolio manager. Now, I think like many people were a little confused, ma'am. Who is a portfolio manager? How is it different from a stockbroker? You see, a stockbroker is not going to, how do I put it? Okay. So let's say, for example, I have 10 lakh rupees in hand. Now, I want to invest these 10 lakh rupees into, let's say, Tata Motors, Reliance, and probably I want to invest in TC. I mean, I think Tata we've already said, maybe like Tata Steel or something like that. Now, I can approach my stockbroker and tell him, help me execute these trades. So the stockbroker will be like, okay, I'm going to keep a commission, and then I'll help you execute it. So I don't need to know any technical issues. I don't need to have anything. I can simply call my stockbroker and be like, execute this trade. He'll do it for me. That's a stockbroker. Portfolio manager is basically someone, see, I'm, let's consider me as an retail investor who's an idiot. I'm an idiot with lots of money. I have 1 crore rupees in hand, but I have no idea how the stock market works. If I invest in, you know that story, right? If I invest in Tata Steel, that day only Tata Steel share prices will come down. So I'm like, I can't deal with the stock market. Let me do one thing. Let me take my 1 crore rupees and give it to someone else. That's your portfolio manager. Okay. So this, I'm not the one determining which stocks are being bought or sold. I'm just taking the money and handing it over to someone. That is a portfolio manager. So he will take a decision as to which stocks to buy, which to sell, what is the strategy over there, how to get returns on them. That's him for me. Now he will charge a fee from me. You have to understand, a stockbroker charges a commission. He'll take point something percentage of the trade. But a portfolio manager will be like, I'm going to charge you so much on a monthly basis. So these portfolio managers are also basically of two types: discretionary, non-discretionary. Discretionary means that he'll manage the client's funds independently and with full discretion based on what the client needs. Non-discretionary basically means that he will manage the funds of the client without any discretion. So in essence, it's like, either I'm giving him directions or I'm telling him, you please take whatever decisions that you want. But these fellows have to have a net worth of greater than 5 crore rupees. Okay. Normally you'll see capital adequacy requirements minimum is at least 5 crore rupees, and then general obligations we see similar over here, but in addition to the normal general obligations he has a little bit more, because portfolio managers are dealing with a lot of money, and 1 crore is very less. Okay. Some people will even come and easily hand over 50 crores and they'll be like, manage it. So he should have a proper agreement with them. He should manage these things properly. Okay. And he should not accept funds, oh yeah, he should not accept funds greater than 50 lakh rupees from his client. Okay. So what I will do is I will take money and I'll give it in the name of different family members, and I'll be like, please manage my funds for me. He should not borrow funds on behalf of the client. Essentially, he should not take money from me and then use that as capital to go and borrow more money. He should not lend to third parties. Okay, this is, in addition to that, he should manage complaints, he should maintain a code of conduct, he should ensure that all the people who are working under him are also maintaining the same rules and regulations. Okay. After that, we have a custodian of securities. Basically, a custodian acts um, as a custodial agent. They basically like keeping the assets of the client, administer and protect the assets of a client. So what we see is that a custodian will do this activity along with some other intermediary. Now these custodians, what they'll do is they'll safeguard my asset for me. So they open a separate custody account, deposit in the name of each client. They'll record the assets that I'm worth, and then they'll even register my securities wherever it is necessary. So if you look at custodial services, everyone should have a net worth of greater than 75 crore rupees. Okay. And basically, like custodians, what they will do is, see, custodial activities are multiple activities. One example that I can give you is like this. There are many instruments in the market, such as, let's say, gold ETF. Okay, what is gold ETF? It's basically, instead of buying physical gold, I'm buying a gold ETF. The ETF will go, the price of the ETF will be the same as gold. So if gold is currently at 15,000 rupees, the gold ETF will follow this somewhere equally. It will be 15,253 or something like that. Then if this increases from 15,000 to 16,000, this will also increase to 16,300 rupees, something like that. Okay, so gold ETF will keep on changing, but the the fund itself will have to actually maintain a physical set of gold assets over there, right? Even though I'm buying a gold ETF, I'm not buying the actual gold. The custodian should be the one to maintain the proper value of gold over there. This is one example of custodial services that we see. Apart from that, basically any assets of the client is being maintained by this custodian. So next, an investment advisor. Simple, he gives investment advice. So basically he'll this business is basically done by anybody. I could give you investment advice today, but tell me, should I or should I not be careful about the advice that I give? I should be careful about it. So therefore they are required to act in a fiduciary capacity to their clients. They should not they should not receive remuneration or compensation, okay, from any other person other than the client being advised. Maintain arm's length relationship, don't divulge confidential information of the client, abide by code of conduct, furnish information to SEBI wherever required, and they're also required to maintain a deposit of money with SEBI, investment advisors. Okay, after that we have analysts. These guys basically do the research for you so that your stockbroker can call you and be like, sir, this is a, you can buy this stock or you have to sell this stock. Now these research analysts will take like raw market data and they'll bring it down into a report that you and I understand. Even research and analysts will have to maintain a sum of money with SEBI, and their general obligations and responsibilities are very similar to your research and analysts. Okay, credit rating agencies basically they give a rating to the securities. So if I want to invest in debentures, but I'm not sure how good the debentures are actually doing, so what I do is I look at the credit rating. If it's got A plus, then I'll be like, okay, it's a good one. If it's got B minus, then I'll be like, okay, watch out for it. If it's got some C or something, I'll be like, please stay far away from it. So credit rating is important for my protection as an investor, and that is why credit rating agencies actually are very very crucial to the whole process. So they should, when they're actually doing ratings, they have to be they have to be true and fair to the best example possible. They have to be what do you say? Rating is a tool that helps me determine how much risk there is involved over here. They have a minimum net worth requirement of 25 crore rupees. After that, we have foreign portfolio investor. Friends, foreign portfolio investor is nothing other than the same as portfolio investor, but basically they will be governed under, they'll be managing your, what do you say? They're basically foreigners. Okay, I'm taking my money and giving it to some portfolio or portfolio investor outside the country. So they'll not only be governed by our SEBI regulations, they will also have to be governed by many other regulations that come in. So this foreign portfolio investor, he's sitting outside of our country. Okay, that time can he simply be like, okay, I'm not going to follow India's regulations? No, he's still bound by the code of conduct and as well as the SEBI regulations. Now, this any person who's taking money from India and investing it as a foreign portfolio investor, he has to obtain a PAN number from the IT department. Basically, he needs to pay his income tax to India, and he should be a fit and proper person, undertake necessary KYC wherever required. So the purpose of KYC is to adhere to AML as well as your FATF regulations, your Financial Action Task Force, your prevention of money laundering, anti money laundering, this thing. So all of this they have to be compliant with and free from all encumbrances. Now, friends, come to the main point. Company secretaries can do audit of intermediaries. This is a very important role of company secretaries. Okay, an audit basically means that we have to check whether they're doing things properly. So this internal audit can be done by a practicing company secretary. Okay, reports should be reach SEBI within 30 days of the end of the financial year. So if financial year is 31/3, let's say 2025, it needs to be submitted within 30 days. So basically 34 2025 it needs to be submitted. Same way, we can even do an internal audit of stockbrokers, trading members, clearing members, internal audits for credit rating agencies, we compliance audit of investment advisors. Now this is a yearly audit, okay, and as well as research analysts or any research entities. We can even audit your share transfer agents, okay, your registrar and share transfer agents. This is with respect to the audits of the CS. This is a little bit important from the point of view of examinations, and ICSI always loves to ask questions relating to role of company secretary. So be aware of the audits that we can do, or company secretaries can do audits of your intermediaries. Okay, so friends, I hope you found this revision helpful. This is the end of it. Let's take a look at our question bank. Okay, so take a look at your question bank. In December 2025, they've basically given a question like this: 10 marks as a comprehension style question. Okay, so look at the nature of the questions. One, it's mostly practical, and in addition to that, they've also asked some additional questions. So they're like, okay, why wants to understand the major activities of a stockbroker in the securities market. So you have to write his role over there. Or to become a qualified stockbroker, what parameters should what parameters why should have so that he may be designated so by SEBI. So you have to write the net worth requirements and any other details that is required. What is the difference between the role of portfolio manager and how is it different from a stockbroker? That is what we discussed over here now. But look at it, each question is 2 marks each. So that means answer in a simple way. I know that you'll probably be able to write stories for each one of them, but you have to write it in a simple, concise way. But we have 5 questions that's worth 10 marks over here. In addition to that, they've asked another 5 marks just for June 2025. So basically 15 marks has been asked from this chapter. But look at it, define custodian, responsibilities of custodian, net worth requirements, governed by which regulation. So please study the regulations also that come under over here. Now, if you take a look at your regulations, we've kept it, it's a very simple regulation. Your SEBI intermediary regulations is there. That's the first one. In addition to that, you have separate ones for merchant bankers, RTAs, bankers, trustees, stockbrokers, each one will have a regulation applicable to them. So just write SEBI in brackets. What is the name of that intermediary? Regulations. Understand the only difficult problem over here is remembering the year. Okay, and if you can't remember the year, please don't write the wrong year. Don't write the year if you're not aware of it. But if you can remember the year in which it was passed, then that is good for you. So even study this because this is basically a 1 mark question that was asked in your December 2025. Custodian is governed by which regulations? All right. Then in June 25, again we have of a similar this thing, 2 marks each, which is basically 10 marks. And wow, they've asked close to 25 marks from just June 2025 attempt. Okay, so all in all, important chapter, scoring chapter, provided that you remember about each one of them. They've asked what are the powers of SEBI, what is the powers of investigating authority. Okay, then appointed banker to an issue, what are the activities authorized to do. Capital market intermediaries are vital link, elaborate with the help of objective of intermediaries. This is a basic question. Okay, it's a general one. So many people actually get confused writing general questions because they forget what to write. So you should even know, okay, this is an intermediary, this is their roles, this is their functions, etc. All right. Like this, we have even for December 2024, they've asked 10 marks. So on a general note, I can say that intermediaries come from anywhere between 10 marks to even 25 marks has been asked from here. Okay. Friends, if you're wondering, ma'am, how are they asking 25 marks over here? Some of them do come under the choice questions. Okay, some of them do come under choice questions. I've brought all the questions anyway for the purpose of our analyzing. So keep in mind that this is an important chapter. You can definitely expect a minimum of 5 marks being asked from this chapter. Okay, on the more common end, you can even have 10 marks to 25 marks, anywhere in between, that can be asked. So be prepared accordingly. Okay, so I've even given some additional questions. Go through them. They'll be quite helpful. I've given almost 15 questions for your practice with answers. Do check it out. It will be very helpful in terms of writing your answers. Okay, so friends, let's move on to our next chapter. So we've completed securities market intermediaries. Now we will be starting out with the chapter of IFSEA. All right, so take a break if you want to and then come back to this class. We'll be starting with chapter number 7, International Financial Services Center. Okay, so I shall see you guys very soon. Hi guys, welcome back. I hope you all had some tea, had a short break. Let's continue with our chapter number 7, IFSEA. Very interesting chapter. Let's just take a look at it from a question bank to see like what questions are asked over here. In IFSEA, in December 25, they asked only 5 marks. In June, they have asked 5 plus 5. 5 plus 5 was asked, so almost 10 marks. December again 5, June again 5. So guaranteed 5 marks will be asked from here, one question. Maximum it can go up to is 10 marks. Guys, one more thing, okay? Just because we are analyzing how they've asked in the past doesn't mean that ICSI will stick only to this pattern. Out of nowhere, they'll decide to ask 25 marks from IFSEA chapter. And I'm not just talking about chapter number 7, I'm talking about any chapter in SEBI, or sorry, in your capital markets, subject. So ideally, from 40 marks, they're not going to ask 25 marks from just one chapter, but you never know. Be prepared. This is only to help us analyze what is the weightage or how they're exactly asking. Don't make this as your mantra and be like, I'm only going to learn about this. Fine. So keep this in mind. IFSC is a very simple concept. There are very new words over here, like something that we are still getting used to. But or like overall, I can say that this is a chapter which is like scoring and easy to understand. So let's start. Yes, IFSCA. What is IFSCA? Okay, first understand the expansion of IFSCA, International Financial Services Center Authority. Now this is an authority. That's why we call it as IFSCA. This authority will govern the IFSCs. What is IFSCs? International Financial Services Centers. Okay, that's all it is. Now we are going to be taking a look at who this authority is. This is like the boring part, okay? But questions can be asked from here. So we take a look at the IFSCA Act of 2019, and then we have the IFSCA Listing Regulations 2024. This came out in 2019. This came out in 2024. So what exactly is your IFSCs? They're financial services. Please understand, financial services. Financial services itself refers to capital. But remember, the word says international. So that means this capital that they're referring to is foreign capital. So foreign capital, we're trying to create some kind of services, okay, which allows Indian companies to access foreign capital or to bring foreign capital into India so that we can invest into it. Whether it's a foreign fund management, whether it is issue of securities, or whether it's issue of depositories, depository receipts, something we want to tap into that foreign market. And IFSC is basically coming to do exactly that. All right. So if you look at IFSCs, they basically, the infrastructure is very interesting. Okay, they have an international exchange. They have the NSE IFSC, and then they have the bullion exchange, which is a very new thing which has come in. And basically, you can do bullion trading. What is bullion trading? Basically, gold and silver. So this is like the infrastructure about IFSCs are so different. It's a very nice thing to learn about. Now, about the services center itself, like basically the whole point of the IFSCs is that we can encourage the flow of finance across borders. So growth of IFSCs, accelerating IFSCs, and accelerating socio-economic goal is the importance of IFSCs. Now, how IFSCs are usually always associated with an SCZ, and right now we have one IFSC, I mean the Gujarat International Financial Tech City, also known as GIFT, which is a part of the SEZ. If you go into the website of the GIFT IFSC and all of that, you'll be able to see it over there. So in essence, it's an SEZ. Under that, they have an IFSC setup. Now let's come to the authority itself. This authority is actually one of the most interesting authorities that I have come across, because India has a lot of authorities. We have SEBI, we have RBI, we have IRDAI, all of them. And we've given different powers to them. Now we want one more authority for IFSCs. Then we already have RBI. RBI already governs the monetary policy in our country. We have SEBI that's governing all your listed entities, the securities market. So why do we want another regulator? But they brought in a regulator and they said that, look, this regulator will have the same power as that of, okay, as that of RBI, as that of SEBI, IRDAI, and the PF regulatory authority. Four different authorities, four regulators combined into one, and this is known as the IFSCA. So, in essence, your IFSCA authority is basically having the power of regulators like RBI, SEBI, IRDA, and PFRDA. So, these guys, this regulator is mainly coming in to regulate the financial markets, but only in the IFSCs in India, not in the whole of India, because for that we have RBI already. We basically have all these regulators. So these this what is the function of this regulator? Develop the IFSC first, develop financial products, financial services, develop the full, create developmental process so that people will come and set up in this IFSC. Interestingly, they like create a lab for financial experimentation. So test, is this particular security working, is it not working, something like that. And then a unified regulator exercises control over all of the functions within that IFSC. So all powers exercisable, they're saying powers of IFSCA is basically all the powers exercisable by the four regulators can also be exercised by IFSCA. Then this is the schedule that they are referring to. So RBI has powers under all of these. SEBI for all the regulations, IRDAI and PF. So our IFSCA will also have the similar authority. Now, what are the different types of financial products? Now, here it gets a little technical, okay? Here, these are words that you'll just have to get used to saying. So, say it with me. Securities, contracts of insurance, one very important financial product. Deposits of money, credit arrangements, then foreign currency contracts, because conversion from, let's say, rupee to dollar, or from dollar to yuan, or rupee to yuan, any other product notified by the central government. So central government will notify at some point. So securities, contracts of insurance, contracts of foreign currency, deposits, credit arrangements. New financial products, and this is very very interesting, okay, because we've not heard about these products before. Aircraft leasing, operating leasing, ship leasing. These are new financial products that are being introduced into IFSCs. And it will be great to understand how they're developing and what are the statistics related to it. Bullion spot trading, bullion depository receipts. Now, these are all new financial products which have been notified by the government via Gazette notification. Okay. After that, financial services. Those are products, these are services. So then what? Buying, selling, subscribing to a financial product, deposits, safeguarding assets, contracts of insurance. So you're providing the services. So you could be a chartered accountant, you could be a CS, or you could be any professional who's offering to do these services for someone. Okay. Establishing any investment scheme, maintaining records of a financial product, selling instruments, or providing payment services. Like literally there are people who will provide companies, bigger companies require to pay out, let's say, PF or employee state insurance for thousands and thousands of employees. A company doesn't want to do that, so they'll outsource that work to someone. Then even giving any advice for buying, selling any financial product or any services or exercising any right related to it, that is also a financial service. So all your legal, compliance, secretarial, as company secretaries, we do all of this: auditing, accounting, taxation, consulting, administration of assets, any others approved by the IFSCA from time to time. Now, interestingly, global in-house centers are coming up. This is the new services relating to, like, they'll provide, as the name suggests, global in-house centers. Any kind of financial products and services you need help with, they'll help you out. Trading in bullion depository receipts, vaulting, courses offered by foreign institutions of foreign in the IFSC. This is also new services which have been set up. Okay, friends, these are technical words. Okay, like maybe once you learn about it more, read up about it more, it makes sense. But from a purely examination point of view, these are words that you have to learn to commit to memory. So GIC, bullion vaulting, and courses offered by foreign institutions regarding financial management, tech, engineering, mathematics, etc. in the IFSC. Okay. How do you list yourself in the IFSC? Basically, they're saying that follow the IFSCA listing regulations. All right. It can be an IPO, it can be an FPO, it can be by a special acquisition company, it can be rights, preferential, it can be depository receipts, debt receipts, secondary listing, commercial paper deposits. Friends, these are all the different types of securities that we can list on a normal stock exchange. The same thing will apply even for listing in an IFSCA, right? And then they're saying the following entities would be eligible for listing. They should be incorporated in the IFSC, in India, or foreign jurisdiction also. Because remember, we're trying to get foreign capital over here. And then eligibility criteria. And here's like a completely technical part, just like your ICDR chapter. Operating revenue of at least 20 million USD over the last 3 financial years. Basically, last three, and they're saying that operating revenue, pre-tax profit, post-issue market cap. Operating revenue 20 million USD, what do you say, pre-tax profit of 1 million USD, and post issue market cap 25 million USD. Then it needs to, there are two criterias over here. If the proposed issue size is less than 50 million US dollars or greater than 50 million US dollars. So what they're saying is that in if it's less than 50 million US dollars, the lead manager, which is basically your bank, if he gives a due diligence certificate, it is sufficient. Okay. But in greater than 50 million USD, since it's a much bigger size, lead manager should submit DD certificate. But additionally, even observation letters will be given by the authority. This is exactly how SEBI also works. Okay, SEBI for main board listing says that I'll give my comments for it, and then you have to change it as per my comments. But then in SME IPOs, it comes out and says that, look, listen, let your merchant banker itself deal with this, lead manager deal with this. I won't interfere at this stage. The same thing applies even for your IFSCA listing. Okay. Then we have offer should be compulsory made within 12 months from observations issued by authority. The offer should be open for at least 1 working day to a maximum of 10 working days. Minimum 25% should be given to the public, and where the issuer is incorporated outside of India, they're saying that is 10%. Remember, minimum public shareholding is always 25% rule you'll have to follow. In all its variations, ultimately it'll come up to 25%. Then follow-on public offer can be made. SPACs, basically they're saying that SPACs are also eligible to raise funds through IFSCA. Okay, where target business combination has not been identified prior to the IPO. Its redemption and liquidation is in line with regulations. The sponsor of the special acquisition company should be spotless. Basically, good track record, and all the investment banking activities shall be disclosed in the offer document. Then, apart from that, Issue size not less than 50 million US dollars. And then they're saying sponsors should hold at least 50% and not more than 20. Minimum application size is at least 1 million USD, 1 lakh USD, and they have to follow certain specific obligations such as maintenance of escrow account, etc., etc. These will have to be followed in accordance with the regulations. Now, come down. Yeah. What is a commercial paper? What is a certificate of deposit? Commercial paper, we already know it's a type of immediate money that is raised by companies. So they're saying that yes, can also issue CPs on the listed exchange, and the maturity is basically it should be valid for at least 7 years, not more than 1 year, because they're short term liquidity funds. And they're saying that the application, make an application, okay, then the same thing, file offer document plus information memorandum, and then pay whatever fees is necessary. Fees is usually 1,000 US dollars. What is certificate of deposits? Basically, certificate of deposits is also the deposits that is deposited with the institution. So these certificates can even be listed on the stock exchange and can be easily traded. Same rules apply over here. Make an application, give out the offer letter, information memorandum wherever necessary, pay the USD thousand USD, and you can make your application. Now, what are your post listing obligations? Here also you have to appoint a compliance officer. Sorry, a compliance officer. Any changes in your directors, KMP, compliance officer, all of that will have to be would have to be immediately informed to the stock exchange. Then shareholding pattern has to be submitted on a quarterly basis within 15 days of end of each quarter. Okay. Then financial statements will have to be filed on a quarterly basis. But then they're saying that it's audited standalone and consolidated would have to be filed within 3 months of end of financial year. But what about its unaudited financial statements? Then for unaudited financial statements is basically they're saying for the first half of the financial year, not later than 45 days from the end of the first half year. So it's not quarterly, it is half yearly reporting. Okay. Corporate governance report will also have to be submitted, but it should be submitted in the annual report. Sustainability report is to be given not later than 6 months of end of financial year. And then they're saying corporate actions, any bonus, dividend, consolidation, stock split would have to be informed to the 3 days in advance before the activity. And then obviously needs to have a website and even a whistleblower mechanism. So this is very similar to all our post-listing obligations when we study under Part B. So friends, this post-listing obligations, right? First study ICDR, then study LODR, and then you'll realize that these provisions are very similar to your normal listing companies. So these are general obligations that have to be followed by almost every listed company, whether you're listing on main board or SME, or whether you're listing on IFSC exchanges. All right. So, friends, with this, we come to an end of your chapter number 7, also, which is the IFSEA. I have to remind you once again, this is merely a recap. All right. This is merely a recap. So, do your studies properly. I hope this revision did help. I would love to hear your comments below. If you think, if you need any other, revision, there's a number right in front of your screen. If you're having any doubts, please contact this number, raise your questions, get your answers clarified. Okay. Now, I might have a little bit difficulty answering your questions in the YouTube comments itself. So I would love it if you reach out to me through our mobile number present in the screen below. Okay. Or put it out in the comments and I'll try to see how I can incorporate it into a video. Fine. So that's all with respect to today's class. Okay. We have been seeing the past questions, etc., and we have also seen how the weightage is being asked across all the chapters, whether they're asking 5 marks or whether they're asking 15 marks, and the nature of questions being asked. Friends, past question answers can be taken from your guideline answers. I would love it if you actually read your guideline answers. Okay. Now, at this point, we'll come to an end of this particular, revision of 40 mark series. So let's come back to our textbook. What should be kept in mind for these 40 marks? 40 marks, generally I can say that it is scoring. Okay, I can say that it is a scoring aspect, but it's also technical. Where is it technical? You will find technicalities in your intermediaries chapter and in your IFSE chapter, because all the others, right, your these three are technical, but they have common concepts between them: applications, registration, fees, offenses, penalties, powers, functions, duties. This is what you'll see across these three chapters. This is introduction, so you can write in own words. Okay, but one thing about CMSL that I want you to be very aware of is, please understand that there's a lot of technical words being used over here. It's very easy to say securities, contract of insurance, etc., etc. But at this point, when you're at the revision stage, you should have these words at the very back of your mind. Okay, instantly you should be understanding this. Now, don't try to explain a contract of insurance in 5 sentences. That's not going to help you at all. Okay, so make sure to know the keywords exactly, then write in your own words. There is no harm over there. And when you are writing any kind of provisions, now friends, this is where I'm coming to how you need to write your answers. Okay, also, before I start out over here, I've been noticing that any videos that I'm putting out on YouTube, especially the last revision class, I get some data, from the YouTube video. It's a 2 hour revision class, but I'm seeing that you're watching only, like, let's say 2 minutes of it. So that means you're not even watching the full class. So do watch it till the very end. It's a very helpful revision series. In 2 hours, if you're covering 5 chapters, that is so helpful to you. Even this is going to be almost like a 1 hour video for covering two chapters, and even tips on how to write your examination. So please do watch till the very end. I know we're at the very end of this chapter, can't say much over here, but it's helpful when you're able to dedicate this much time to just watching the video. Fine. So come back to how exactly you're going to have to write your answers. Please keep these things in mind. One, write the name of the law or the rules or the regulations in its full. Don't just write the regulations are applicable or SEBI rules are SEBI regulations are applicable over here. Then wherever possible, mention the section numbers. The section numbers, or whatever rule number, regulation number, whatever be the case. Then whenever you're answering, start out with an introduction. Okay, the introduction will usually be these, as per rule 19A of the SEBI regulations. Okay, this is the provision, and then you have to go ahead and write the body. Body is basically the answer. Okay, then after that you have to, wherever the questions ask, is Y entitled to do this, or is this person eligible to do that, you have to give a concluding line over here. What is the concluding line? You're giving a final one line sentence to conclude your answer. Okay, many people don't structure their answers and then they wonder why they don't get marks. This is how you have to write your answers. Now, one thing I can say simply over here is that, ma'am, I know the keywords, but I don't know how to write in the way they've given in the textbook. Write keywords plus your own sentences. Okay, but use the keywords, underline keywords wherever necessary. Underline it, and please underline it neatly. Yeah, don't just scribble across your paper like that. It's annoying, from an examiner's point of view. So write the keywords, but write using your own sentences. Be neat in your answer sheet. Please be neat. Nobody likes reading a messy answer paper. Okay, wherever, every question, like let's say question 1 should start from a fresh page, question 2 fresh page, because this is there in your exam guidelines also. Now you'll be like, ma'am, should I write every question in a new page? No, you can write question 1A followed by question 1B followed by question 1C. You can write them continuously. Then when you come to question number 2, start from a fresh page, and please write it down. Please write your answering the question for question 1a. I've literally seen some people writing answer sheets where they've just written the answer. What are you answering? Are you answering question 1a, or are you answering question 1c, or are you answering question 5c? You have to mention this in your answer sheet. Many people don't do this, and then you wonder why your marks are not there. So make sure this is there. Keywords, neatness. Make sure to write each question, like question 1 from a fresh page, question 2 from a fresh page, like that. Then what if you don't know the answer? Okay, what if you don't know the answer? If you don't know the answer, write a general answer, because it is my belief that answering a question, even if it is correct for just one sentence, can even give you just 1 mark, and 1 mark can make all the difference. So you don't remember the regulation, you don't remember the section number, but but you know the answer. Write this general answer in your own words. Okay, my mantra is that you try to attempt a full 100-mark paper. But if you feel like, no, ma'am, I'm able to write 80 marks, let's say 90 marks thoroughly, I know it properly, but 10 marks I cannot write properly, then that is also your choice to make. Okay. But make sure that whatever is going as an answer in your answer sheet should be pakka. Don't write half answer here, half answer then, expect to get full marks. You're not going to get that. So wherever possible, if you have the time, try to attempt all 100 marks. And for answers you don't know, write general answers. So attempt 100 marks, but wherever necessary, answer for the questions that you know. The questions that you don't know, if you have the time, attempt a general answer, otherwise you leave it. Okay, so this is a decision that you are required to take. Don't go around watching videos saying, should I attempt 100 marks or should I attempt only 50 marks? Please don't ask questions like that. You have to answer full 100, but you also have to strategize so that you can get the best answers across in the limited 3 hours that you have. Okay, so this is just some of the tips that I can give you for writing your answers. We'll stop over here with respect to our revision series. I genuinely hope it was helpful for you, and we'll continue with the revision aspects. But before that, please, it is my sincere request that you give any feedback, whatever, even if it is a negative feedback or even if it's a positive feedback. Ultimately, this revision series is for you. So let's work together, let's study well together, and best of luck for your examinations.